Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop loss order in place. Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's Friday Roundup, done on Saturday. I thought I was going to get the day off. I got a bunch of emails. You guys wanted my roundup, so here we are in the studio, and we'll do one for you anyway. I don't mind it. I don't mind it, guys. I think this is great. Anyway, let's do a little recap of what happened during the week. Boy, I guess you guys already know. Not much you need to hear from me. These markets melted down across the board. They melted down in Europe. They melted down in Asia. They melted down here. Our commodities dropped, which, by the way, presents some opportunity that we'll discuss. And the S&P and NASDAQ got sort of knocked out of their spot. They're making new highs. Beginning of the week, we put a new high in. End of the week, woo, we settled on the lows. That's interesting. That's good trading. I had a little OMNI. OMNI got us long. Nice punch in the eye. OMNI got me long Thursday and Friday at the exact high. Not anywhere, not just anywhere in the move, at the exact high. Got me long. Which means my OMNIs are working really well, but we may be turning into a bearish market here. Because if an OMNI, for 13, 14 days in a row, the OMNI says buy it here, it turns out to just about be the low of the day on a lot of days, and we rally up and make profit. Sometimes it says sell it here, that's the high, and we drop down, we make profit. Well, Thursday and Friday, it said buy it here, and it was the exact high, which means it's still working well. We just might have to start taking the signals the opposite way. We'll see. For now, OMNI calls its calls. We'll go from there. Let's do a little weekend review. Stop placement. I will always talk about stop placement. I will talk about it in every video. There is never enough pounding into your heads about stop placement. Without stops, and I did get a couple of calls this week from guys in the middle of a panic on the big day, Tuesday. Oh my goodness. And they would call me and say, Oscar, I don't have my stop in. What do I do? Please don't ever call me with something like that. If you watch, well, that's not true. You can call me with anything. But if you watch my show, how can you be trading without stops? Are you crazy? Put your stops in always. For instance, if you put your stops in first, not only do you got to put your stops in, you got to put them in first before your buy orders or your sell orders. If you're a buyer, you put your sell stop in first in case the market cracks while you're still typing in your buy order. You'll already be short on your sell order, on your stop. These things do happen. You saw it happen in the S&P. I don't know if you personally were in there typing in an order and it got ran through, but it happened to lots of people. Put your stops in. Not only do you got to place them, stop placement comes first. Always place them first. Very important. Place your stops first. Okay? I will continue to pound that into your heads. I place my stops first, always. Lesson from me. This week, we did have our crumble, and it looked like the NASDAQ led the way. In fact, the NASDAQ put in a huge bar right before the day of the crack. A much bigger bar to the downside than the S&P did. In the past, we did our challenge, NASDAQ versus S&P. Most of you traders came in with answers that you thought NASDAQ and Russell led the way. Well, we saw it happen live before our eyes. NASDAQ went, NASDAQ made the move, S&P came right in with it. So NASDAQ, even though it wasn't a week or two leg like normal, that was a one-day leg. If that it happened on the same day, it was a short-term leg. But the day before, the bar indicated something was going on in that market. Okay, so NASDAQ did seem to lead the way on that move. We have the grain scales that we talked about. Those grain scales, I'm with you guys. I have not forgotten you. I am scaling into it. The scales are here. We'll talk about them in a minute. Okay. It may seem scary for you to be getting into these scales here. In fact, I was going to save this for step 4, but let's do it now. Forced liquidation. Demand is still rich for these grains and for everything that we trade in commodities. Okay, we've had a pull down in the stock markets around the world. So money has evaporated. The people are still alive and kicking. They're still going to need food. They're still going to need clothes. They're still going to need product. They're still going to need our raw materials that it takes to create those products. I don't care what happens to the stock market. Come this summer, these grains are going to need to be consumed. The stock market coming down the way it has in my opinion, has given us a fantastic buying opportunity into grain prices that most likely we would not have seen without this S&P pullback. The S&P pulled back, we got forced liquidation. I mentioned that during the week in the videos. I've made those calls myself when I was a broker coming up. They're the worst calls to make, but you grab the phone and you say, so-and-so, I'm sorry to say, you're in a margin call for 30,000. You're in a margin call for 20,000. You're in a margin call for 100,000. You need to send in money. And usually on the other end of the phone, you hear, well, let's liquidate X, Y, Z and sell that out and put it into my stock portfolio to pay for losses. That's called forced margin liquidation. That's what I think you've gotten in the grains, which has given us an opportunity to buy wheat, corn, and beans at levels likely would have never been seen if the stock market kept rallying. So with that in mind, the scales, if you've been following my scales, and again, guys, I will not leave you on this. If you're in these scales, I'm in these scales. I'll be watching them every day. I will be on this. I will talk in my forum about it, and I will make sure on my board I have things posted. So don't think that I've told you to get into scales and abandoned you. I am with you on this trade, okay? I think we're going straight up in the grains come summertime. May wheat. You should have bought one at 475 and one at 465 and still have an order working at 449 if you followed my May wheat scale. Long two out of the three that we were looking to buy. If you followed my corn scale, you should have bought one at 422. You should have orders in to buy at 413 and orders to buy at 404. So you'd be long two wheat. You would be long one corn since this pullback started. You should also be in the May beans. You should have bought one May bean at 764. You should have bought one May bean at 754. You should have an order in to buy beans at 738. I will certainly keep stop levels in mind. I will let you guys know what those levels are. Of course, a stop is your best friend. Have emergency stops in at all times. Problem is, my stop levels right now are past limit down, so I can't place them Sunday night. If we move down Sunday evening, then I can place stop orders 50 cents lower than that, possibly. I'm not saying that's where they go. I will have those stops for you for Sunday night's video. Just to let you know that I will not abandon you on this. I think this is a fantastic buying opportunity into the grains. We are scaling into them. We are not averaging. I do not believe in averaging. Averaging has killed more traders than any other type of trading I've ever heard of. And that means when a broker or a trader is standing there and he buys 10 and the market starts to go down and he thinks, oh, if I buy 10 more halfway back up, I can average out. Those guys get carried off the exchange. I've seen it time after time. You cannot average. Doing what we're doing here, this is entering on a scale form into a position. That's a totally different story. If someone called that averaging, I'd get out of my trades right now and run for the hills. I do not average. I'm a scaler when it comes to stuff like this. Just get that out of your way. All right, so you should be long two wheat. You should be long one corn. You should be long two beans. I'll stay with you on those scales. Now we're going to get into a little bit of work about the S&P. I just wanted to show you a couple of averages to keep an eye on, to keep in your mind. Just think about these as the market moves over the next couple of days. I'll show you what they mean. I have mentioned them to you before. And they're down here on the computer mic right now. I'm going to open the computer, so zoom in. Are we good? Okay. That is your S&P daily market with some averages on it, which I'm going to come around here and discuss with you right now. Okay, on your daily chart, if you recall, I had showed you this chart before, and I told you that we had a 48-day exponential moving average that was just hugging this market. And hugging it is what it's done. Look at that red average right there. Hugging the market. Well, we broke it, and you heard me say 2 days below that average, and we would start to look bearish. Well, on the day it broke, look at it. Geronimo! It just annihilated that average. It also annihilated the 81-day average, which is this next one here, which is a very reliable average on most days. Bounced off the 200-day exponential moving average. And we have another 200-day simple moving average down here. So, back to the top. The red is the 48-day exponential. That price came in at 1437.35. We took that out on Tuesday. Same day, Tuesday, we took out the 81-day moving average. That's that black average that you see. That was at 1424.50. Boom, boom. We stopped, rallied a little, came down 2 days later on Thursday, and bounced off the 200-day exponential moving average. That's the purple average that you see here. We bounced from there. We rallied for a day, came back down, got close to it on Friday, settled by the lows. Does not look very good here, but we did bounce from that 200-day. Next level of support using averages, we have the 200-day simple moving average. That price is $1364.25. It's probably the first target if you're using averages to gauge where we may go next. Interestingly enough, the 48-day moving average and the 81-day moving average are extremely important to our S&P market, and I'm going to show you why right now. Now, when you take those averages, the 81-day and the 48, and apply them to the weekly chart, look at this. It hugs, it hugs, it hugs all the way. And that is the 81-day moving average. I put a little bit of a weight on it. I weighted it, and the price would be $13.20 with the weighting. $13.20 target on the downside. We had 13. Well, on the daily, it broke it at 1424.5. You take that same average and apply it to the weekly, and you get 1320. So the 81-day and the 48-day moving averages, which are averages I mentioned to you I've been using for quite some time, are giving us targets on the downside. We will keep an eye on them closely. I just wanted to show you them because they have worked for me year after year, and I really do like using them. I'll go back now to just finish up a little quick review of what we spoke about. I will certainly keep these averages in mind, and I'll remind you about them in tomorrow's video. Okay, so you've seen the averages. You see that we broke them on the daily, but then when you apply them to the weekly, we got some targets down here. Remember, the 48-day, that red average, that was really important while we were looking at the daily last week, and we broke it on Thursday. On the weekly, that support is 1376.20. Daily support as well, by the way. On the 81-day moving average, it's 1346. Target for the downside if, in fact, we don't start rallying out of the whole Monday. So you saw the averages. You see them before your eyes. They've worked year after year. Put them up on your charts. You will see what I'm talking about. They are certainly at least bases for us to think about trading around. And, you know, in this rough and tumble environment, you have to find something, at least for a base, to start your analysis from. So that's what we're going to use for the little bit longer term objectives on this S&P. Okay, that's my lesson for the weekend roundup. Saturday roundup this week. We are working on our site every day. The beta version is just about to come off, and we're going to give you guys the live version, maybe another day of testing. We're working on chat session for you right now. We're still doing a little bit of work with the simulation program, but that's going well, so we'll have that for you shortly. When you're at my YouTube site, www.youtube.com/futures analysts, hit the subscribe button. You'll get our videos the moment we're done with them. YouTube will get them right out to you. Always, always, always remember, a stop is your best friend. I will say that every video until we're blue in the face about it. You might not even want to hear it anymore. Place your stops. They'll keep you dry. They'll keep the powder dry. They'll keep money in your account so that you'll live to fight another day. Okay, if you'd like to email me, futuresanalysts@gmail.com. If you email me there, you can get on my Flash Updates database. I speak about them video after video. Flash Updates are essential for successful short-term trading. How's that, Mike? I know you want me to say that every video.
Thank you.
Good job. All right, so don't forget, get on my Flash Updates list so I can get my flashes out to you. You can stay at the website where Flash Updates come automatically right in my OMNI box. The website is www.futurestraders.com. www.futuresanalysts.com. Type in either URL, get you right to my site. If you stay there, you will see the flash updates come automatically. Good luck, traders. I hope you had some kind of a good week. Some guys had a great week. Some guys got murdered. OMNI had me by the highs 2 days in a row. Black eye, black eye. But you know what? I'm coming out Monday fighting like an animal, Rocky Balboa style. Good luck, traders. I'll see you Sunday night.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.